Hello there and welcome to the first video in the Astranti MCS analysis on the Nortan FOSSC pre-scene for the 2018 February sitting. So, just as a prelude to this series, what we're going to be doing throughout is going through different sections of the pre-scene and really going down to the bare bones detail that we can get from these seemingly innocuous sentences that perhaps are very easy to neglect. So, for this video, we're going to just dip our toe into the content. We're going to go through the introduction and the company background. Following videos will cover all the different sections as you see here, but just for illustrations purposes, we are going to start with the introduction, get to the company background, just to get a feel for how this pre-scene is. So, what I would like to mention is that the pre-scene is often the context by which the unseen material is based. However, the introduction to the pre-scene is in itself a really important contextual basis for the rest of the pre-scene. So we really can't ignore it. It does actually have so many different secrets relating to the pre-scene, at least as far as speculation and getting that sort of machinery of your mind working to try and pick out the important parts. At least that's been our experience so far. So let's get stuck in right away. So Nortan is a major quoted oil company. And this means that they are listed on the stock exchange, or a stock exchange rather. Therefore, they can raise equity finance via rights or share issue. Now, I'm not sure if you've taken a peek at the industry pack yet, but this is quite an important factor because the industry at large is in fact relying on debt finance due to investor nerves, if you will. So any ability to remedy this reliance on debt finance with more equity capital has really good implications for gearing. And next up, we do have an inclination as to how large they are. They operate globally. Given this dispersed nature, we can assume that perhaps, or speculate rather, that they have a divisional structure. And what we can take away from that possibility is that they might have multiple finance functions across the business because of this divisional nature. However, this speculation is in fact quickly dispelled. By this I mean, we're pointed out that all its accounting is processed by a shared service center. So it's very similar to outsourcing, except it's centralized. It's part of the business, it's internal. So some of the reasons are very similar. For example, as part of the TARA framework, we might have risk transfer to this very specific centralized business unit, the FOSSC. So any risks regarding accounting are all passed to the FOSSC instead of the other units that are operating. Other reasons include potential improved quality. By having a specific business unit that is wholly focused on the accounting and management accounting aspects of the group, you do get specialisms and expertise that improve quality. Likewise, there may be lower costs. When you're doing the same task over and over, as we might have encountered with the learning curve theory in P2 rather, there is this lowering of costs as staff become more able to do it faster, more efficiently, and take less staff to do certain tasks. So if it required 2 people at the start of the year, by the end of the year, provided the conditions are met, such as the same kind of workforce and a motivated workforce, they will be faster It might take one person to do it. There is a caveat, however, and there is this element of a lack of control. If the operating units are not handling their own accounting, there may be some issues of control not being quite as tight because they are transferring information to a shared service center and not keeping their own records themselves. So next up, we get this reminder that we're moving on from the OCS level. Some of you may have already done the OCS, Preseen, and passed that with flying colours. Congratulations. However, this kind of small sentence might seem quite innocent, but in fact it's just reminding you that instead of just providing information, as a senior financial manager, you're also required to provide potential solutions and suggestions. So it's reminding you, this is the MCS Preseen, not the OCS. You do need to take that step further. But before I ramble on about the specifics, importantly, they talk about a currency in Centaria. This tiny sentence has quite a few implications, particularly regarding economy. If Centaria has its own currency, but Nortan operate globally, aspects such as currency, exchange rates, and interest rates do play into operations. So the risks involved have some really far-reaching elements. So we may get a question on exchange rate risk. It's the truth. They have their own currency. So we have to keep that in mind. And whilst you might not be expected at the F2 level to explain how exchange rate risk is managed, you still need to mention that it is a concern and that it can be hedged against rather than any instruments that you use to hedge. And in this last segment of the introduction, we are given a very clear indication of what the base module will be. So that's not to say to ignore the others, far from it. But your primary responsibilities are management accounting. So this is P2 Homeland. Whether it's every question, I very much doubt it. But what they're basically telling you is, P2, you must cover every nook and cranny. If you do not know your P2 content, you're going to be in trouble. So don't ignore E2 and F2. But honestly, P2 is going to be the bread and butter. E2 and F2 are going to be those sprinklings that get you the extra marks and, interweave different aspects and show your understanding. But P2 is going to definitely be at the forefront of this pre-seen and unseen exam. Next up, we see that you often liaise with colleagues in many different countries. So there's one aspect that I would like to bring up that comes to mind, to me at least, is that how do they communicate on, say, an emergency based on different time zones? You could be in a wildly different time zone to someone working in Centaria, for example. But if you both need to be awake and working for an emergency to be solved, how does that work? And following on from this, we can sort of bring in the cultural elements of the company. For example, McKinsey's 7 S's, what kind of systems are in place to ensure that communication is not disrupted too much by time zone differences? Just as an example, rather. So when we have that in mind, we can also bring about, or at least link in, the cultural web, for example. Getting those E2 marks. Company culture is not the easiest elements to fit in, but here we have an avenue in which to apply them. So, with that said, I'm sure you didn't look at this small paragraph and think we could get so many different potential, not definite, but potential indications about what we might face in the unseen exam. We're going to do that with the next page too. So, let's move on. The company background. So, this is focusing on Nortan, and we know the FOSSC is the focus of the pre-seen, but they are a part of the Nortan group. So we're going to get a bit of background now on what the Nortan group constitutes and their history, basically. So let's jump in. They were established in Europe in the early part of the 20th century. I'm not sure whether you've checked out the industry pack yet, as I've mentioned, but if you haven't, it might be worth taking a peek alongside this video, because in the early part of the 20th century is when you see these bigger companies start originating. The 1890s to 1930s are where the big, super huge companies are beginning and they're getting a foothold in the industry. So what we could extrapolate, and it is a speculation, nothing tangible per se, is that Nortan Group might actually enjoy first to market advantages. They might not have been the first, but they may have been very early to the market in Centaria. And this does have the advantages of becoming larger and having your finger in many pies, if you will. And we're told that they're a major force, or at least becoming a major force, in exploration and exploitation of oil reserves in the North Sea. So what comes to mind as far as the industry context is concerned is that they're an offshoring specialist. This is a specific type of operation, and production methods and operations do differ. So maybe check this out alongside the industry pack. Get a feel for what the offshoring elements are, because we might get a financing question about an offshore project. And we're also shown, or at least told rather, that they expanded through a combination of acquisition and organic growth. So organic growth obviously hints that success has happened in regards to positive NPV projects. But interestingly, if they're acquiring different companies, there is this element of how are they financing this? So any acquisition has this immediate implication of debt financing, equity financing, gearing. It's really important that that's the first thing that comes to mind if there isn't a question, if there is a question on this. And it also links to our previous comments about them being listed on a stock exchange. It does give them that equity capital element in which they can fund these acquisitions. And next we are told that they are a vertically integrated business and that they operate in all the different streams. If we've been looking at the industry pack, they have a finger in every pie, as I kind of mentioned a minute ago. The first thing that comes to mind is your F2 knowledge, group accounts. This is where you can apply it. They're vertically integrated. There's a very specific way in which that is accounted for in financial statements, for example. This is where you're going to sneak in the F2 knowledge on what is primarily, at least based on the introduction, going to be a P2 focused exam. You still need to get the F2 in there. This is where you do it. And as we move through, we're getting a feel for the size of the company. Nortan seem absolutely huge. 41,000 petrol stations worldwide. And it again reiterates the aspects of which they're incorporating their operations, basically every factor of the industry. So what we're getting from this, contextually at least, is that they will have quite a lot of cash. They're a large company, but also that they're going to be competing on that top tier level with the so-called super majors potentially, as we've seen in the industry pack. And next we have a revisitation of the subsidiary element, the group accounts, the vertically integrated business. Nortan Group comprises a parent company along with 200 wholly owned subsidiaries. Now here, you might want to pause me and have a think about how that applies to F2, specifically group accounts. I've got a very specific piece of advice, and if you can guess it, I think you're very well prepared for this group accounts element that we're probably going to see more of. So I'll see you in just a few seconds when you've had a little think. And voila! For me, the thing that I would suggest is don't forget the methodology of this group account, specifically the step where you aggregate income and expenses because they are a wholly owned subsidiary. This is something that you want to keep in mind. It might not even come up, but in particular, I do imagine group accounts will have some application as part of the whole Preseen is involved, especially when we consider just the company being so large and vertically integrated. The aggregate part may not come up in a specific exam question, but don't forget it. If you're going to answer a question about how you group account with vertically integrated businesses, don't forget to aggregate. And in this final part of the background paragraphs, we have a very, very specific idea that they have different departments for different aspects. So they have 4 senior management teams report to Nortan's head office. To me, that is screaming functional structures. Each department has its own role and specific responsibilities, and if you recall the study text, there are pros and cons to this. Alright, so you may have scrambled for your E2 study text real quick there, but essentially, as far as functional structures go, there are some key issues with it, which we'll get to. But first, the benefits is that there's clear responsibilities. Everyone knows what they're doing, their division, or department rather, has a very specific role, and they can focus in on that. This also builds expertise, because as we know from learning curve theory in P2, is that in fact consistent work processes and doing the same work day in day out does build efficiency and understanding, so expertise is definitely there. Likewise, this helps costs. Less staff can do more work if it's the same thing that they've been used to for a very long time. However, there are some issues. Between departments, communication can be difficult, and for this reason, there could be a lack of goal congruence. They might be working to slightly different endpoints, which don't really match up fully, at least, as far as the whole group goes. So there does need to be very specific inter-team communication, at least at the management level, to determine where each team is going and ensuring that they all meet at the same place, the same goal. This is potentially a risk management element. And then you can fit in potentially communication systems as part of the company culture, McKinsey's 7 S's. Very, very cyclical how it all works together. Keep that in mind. So hold that thought for a moment and have a quick think about how this could permeate itself into the unseen exam material. When we consider this kind of risk, obviously risk management is a key part in the TARA framework. So a way of avoiding risk could be the McKinsey 7 S's and having communication systems in place to ensure that there's a lesser chance of this risk of the goal for the entire group not being the same for each team. So, with that in your minds, we have actually come to the end of this first video. It is slightly shorter than the other ones. However, in each video we will be going through each section of the Preseen in as much detail as we can manage in a almost bite-sized video. And with this in mind, I hope to see you in video 2, and I hope very much that it's been an important element to your exam success in the future. Thank you very much for listening, and I will see you soon in the next video. Hello, it's me again. I just wanted to take a few minutes of your time to first extend my hope that you enjoyed the free sample that you've just viewed, but also to just sort of explain what else the strategy do to help you pass your exam really effectively, provided you found our sample particularly interesting and insightful, of course. So, of course, we have a study text for every module, ranging from P1 to F3, and the certificate level is also free on our website. So we have study texts throughout the CIMA course, every module you could hope to study. The certificate level are free, as I mentioned, and then the rest of them, ranging from P1 to F3, are all available to purchase. Alongside this, if you're not so much a study text kind of student and you prefer a visual way of learning, we have the course videos. We essentially break down the study text into bite-sized presentations with a walkthrough, and it's a very, very, very engaging way of explaining the course. Following this, we have the Preseen Analysis, where we break down each Preseen sitting into a number of videos, going through the whole document, but also adding a top 10 recommendations for what will come up in the exam, and also a strategic analysis where we put all the models you'd find in E2, for example, to the Preseen itself, whichever that may be at the time. Alongside this, we provide an industry analysis. This is a document and accompanying video which help you give that contextual information in your exam. So for example, if the Preseen's on the oil industry, the industry analysis will break down the oil industry, the current topics, trends, issues, what the competitive market looks like, all those kind of aspects, all condensed into one so you can spend your time wisely in your study period. Following on from this, when you actually want to practice all this knowledge, we have mock exams for all of our materials. So StudyText has a generic mock exam based on the module, whereas the Preseen Analysis has mocks available to purchase that are based on that specific Preseen, that are targeted to the key issues we believe will come up. And if you're not content with just doing those mock exams and practicing that way, we have a marking and feedback system where you can purchase the ability to send in your paper, have it marked by a CIMA qualified accountant, and get personalized feedback on whether you can improve X or Y area. And sort of finally, if you will, if you're feeling really underprepared and that exam is coming really, really soon, the master classes are offered by Astranti, and they're essentially a crash course in anything you could want for that topic. So if it's a masterclass on the Preseen, it's going to give you absolutely everything that you could possibly need to know about the Preseen in one rather really condensed sitting. Likewise, if it was the F3 masterclass, you would have all of F3 gone through in a very crash course style presentation and video link. You can also purchase it post-stream as opposed to viewing it live. All these kind of aspects. We are very, very confident that these materials will help you get the exam success that you want. So we have a pass guarantee. Provided you fill out a form which demonstrates that you have utilized our materials to a large extent and actually taken the time to study them, and you have unfortunately failed, we will offer you the same materials again for the next sitting as a consolidatory offer to ensure that you can get back on the horse and get that exam grade that you want. With that said, thank you very much for watching the sample video. I hope you enjoyed it and it gives you a lot of confidence in Astranti and your CIMA future.